Ladies and gentlemen, congratulations. You have just survived a historic day in the stock market. April 3rd, 2025, a historic day, the fifth biggest point drop in the history of the Dow Jones Industrial Average transpired here today. The only point drops ever bigger in the history of the Dow were back in 2020 during the Rona crash. Absolutely historic day here today. Now, yesterday was Liberation Day, and today was Liquidation Day. Absolutely. Look at the Dow Jones Industrial Average down around 1,700 points here today. You'll be flipping my flapjacks right on the floor. NASDAQ down around 6% today. Look at the S&P 500 down around 5%. And the Russell 2000 down around 6.5% here today for a stock market index. Oh my gosh. Look, pull up a heat map. A heat map will tell you everything you want to know about the space this stock market was in here today. Apple down over 9%. I mean, we're talking about some of these stocks lost hundreds of billions of dollars of market cap here today. Absolutely historic day out there, obviously, right? So in today's video, 4 core subjects I want to go over. First one up here, I'm going to take you through some shocking moves on stocks. You haven't seen anything yet. We're talking 10, 20, 40% moves in stocks here today. Then we're going to get into the VIX. The VIX hit 30 today. I'm going to share with you what this means in regards to if you're trying to figure out, is a stock market a buy here? Is it a situation where this means the stock market's going to go a lot lower from here? Are we going to bottom soon? Did we bottom today? Those sorts of things. We'll talk about that. Third thing we're going to get into is today was, I believe, my biggest buy day in the history of my life. Okay, I put $143,000 into the market here today. We're going to talk about what I bought, why I went ahead and bought it. I'm going to show you screenshots of all that. And the fourth subject we'll get into in this video here today is my personal cash levels and where I'm at with that, so you can kind of understand, do I feel like we're about where we need to be in regards to this whole situation. Okay, one thing only I need from you guys. The sign in my garage says that I need you just to smash that like button. I went to bed last night at 1 a.m. I was listening to that RH conference call. I was up at 5 something this morning. I was already posting stuff on social media at like 6 a.m. Because, I mean, listen, I knew today was going to be a historic day. Like, I knew it. And so you don't get me out of bed at 5 something in the morning and getting me posting on social media at 6 a.m. unless I know something is about to be crazy. And sure enough, it was crazy. Only thing I need from you guys, smash that like button on this video for me. I appreciate y'all for doing that. And if you want to subscribe here to the channel, you can certainly subscribe. Today, what I'm going to actually put as a pinned comment is my X. So if you use Twitter at all, X, you can follow me on there. I'll put that as pinned comment. I post a lot of content, especially during these crazy, chaotic times. Like yesterday, I posted a ton of stuff on X. Today, I posted a ton of stuff. Additionally, if you want to follow me on Instagram, I'll put that as a pinned comment as well. So if you use Instagram or X and you want to follow me on there, you can do that. Okay. Alrighty, folks. You ready to get in some absolute madness? Oh, baby, do I have something to show you. Check this out. Look at RH stock here today. It fell over 40 percentage points. I mean, on a day of Red Dead Redemption everywhere, there's always got to be one stock that just takes the cake and eats it too. And that was RH here today. 40% drop for that stock. Look at Stanley Black & Decker, down 16%. 16% is a crazy move in a day for a stock like Stanley Black & Decker, right? It's just next to a 40% move. It looks like, oh, it wasn't that bad. But no, that's a disaster. Caterpillar, one of the biggest companies in one of the prides of the USA, was down 8.6% here today. United Rentals down 8.5%. You see stocks like that moving down, that's basically calling recession, right? Toll Brothers down about 8%. You might say, Toll Brothers, they build homes in the United States of America, right? What's a big deal? Well, 2 factors in regards to somebody like a Toll Brothers. You have recession fears now amped way up. Just before I started this video, I just heard Goldman Sachs took their recession odds for this year up to 60%, I believe. So recession fears doesn't mean good thing for Toll Brothers. Additionally, actually 3 parts in regards to somebody like a Toll Brothers. Toll Brothers sells to who? They sell to a lot of wealthier folks. The average selling price for a Toll Brothers home is around $1 million, right? This is not a home builder for everybody. Listen, all the people that have money are all scared as crap right now. They're seeing their portfolios go down. They're hearing about Trump this, Trump that. They don't know what it means for their business. If they got a good job at a company, they don't know if they're next to be on the chopping block. They don't know what's going on with that. And lastly, you got to understand, there's a lot of things that go into a new home being built that come from other countries. And so although the home's being built in the United States, it doesn't mean everything inside that home's coming from the United States. Some of it's coming from Mexico. Some of it's coming from Canada. Some of it's coming from China. Like, that's very, very important in this whole situation. And so what does that mean? Price of homes, if you're talking about being built, it has to go up, which, whew, it's already been tough enough for these home builders to sell homes recently. Never mind you tack on all that. It gets even more brutal. Look at crude oil. That's going to tell you a lot, right? Look at crude down over 7% here today. No. Listen, what is that telling you? That is telling you it feels recessionary, right? That's telling you the market feels like recession. Now, also, I did hear that OPEC, I believe, is going to increase production as well. So that could be a part of it. But come on, a 7% move on a crude oil that's already weak. And here we are now in springtime. Usually look at springtime going into summer as kind of a bullish time for crude. If we can't get crude up in this sort of time period, when can you get crude up, right? Now, there is, I think, a big positive. I do have to mention to everybody out there that's looking at that crude oil price, because you could take it as a negative. You say, oh, recession this, OPEC this. Listen, I got something very positive to say about this. This means gas prices are likely coming down over the next few months, which gas prices going down is ultimately a very important signal to the consumer of actually feeling somewhat decent. There's nothing the consumer hates worse than going to fill up their car or a truck or whatever it is, right? And they got to pay some astronomical price. Like, the consumer looks at that gas price, and if it says a much lower number, even though it doesn't add up to that much in the grand scheme, might be 20-cent difference a gallon, 40 cents, it doesn't add up to that, but it's just a psychological effect it has on individuals. When they go to that gas pump and they see it says, $2.50 instead of $3. Like, it's only 50 cents a gallon difference. Okay, you're going to gas up with 10 gallons. It's $5. What's the difference? It's a psychological nature, and it's just, I don't know, it's just something that's programmed into, like, the masses. And it's been like that, and I don't see it being, changing. And so at the end of the day, lower gas prices, it actually does have a positive, effect on the average masses out there when they see that gas price is lower than what it used to be, right? Now, the S&P 500 here today had the second biggest point drop ever here today. Second biggest. The only point drop ever bigger was on arguably the worst day in the history of the stock market. Listen, a lot of people say the day in 1987 was the worst day, but in modern times, that March 16, 2020 is seen as the worst day for stock market investors of the past, 30, 40 years, right? And that day, the S&P 500 got absolutely destroyed, and it was down around 12%. So anytime you're in that category, it was a rough day, right? It was a rough day. Looking at the retail trader investor type stocks here today. Now, this is a stock list I put together back when all these stocks were kind of flying high, just to kind of track them all together and see what happens with these stocks. Man, it's been brutal, right? Hood now down another 10% here today, down to $38. Hims, it seems like just yesterday Hims was $70+. Does it not? Like, just yesterday, I swear that stock was like $70-something. It's down to 27 now, down another double-digit percentage here today, 10%. And you look and you're like, geez, when do these stocks ever stop falling? AppLovin down another almost 10%. MicroStrategy down another 9.6%. And Bitcoin's actually holding decent. Respect to Bitcoin, it's at 82. Given the environment we're in right now, I think this is the best I've ever seen Bitcoin hold. Now, obviously, it's down still a lot from the top when it was at 100,000 plus, right? 105,000 or whatever. But honestly, I think this is actually pretty impressive. Bitcoin's holding and actually showing much more resilience than it has in past cycles. And I believe that's also because there's a lot more big money and institutional money in Bitcoin than we've ever seen. And obviously, a lot of that's coming in the last couple of years, right? Coinbase down another 6.6% here today. That was stocks down to $170. Shopify, oh my gosh, look at big tech today. Shopify got Shopified. 18% move for Shopify. It's a buy. MU, it's a buy. MU down 16% here today. Oh my gosh. Broadcom down 10%. Apple down 9+%. Snowflake down over 9%. Amazing's on down 9%. Unbelievable. I mean, you know what's crazy? I know we're getting to some attractive pricing when I can just look at stocks and be like, that's a buy, that's a buy, that's a buy, that's a buy. Because when I look at this, I'll actually say, like, if somebody has any sort of longer term horizon, like 2 years or more, 5 of those 6 stocks are actually a buy today. The only stock of those 6 that I would say I would not be interested in is Snowflake. Now, Apple's also not super interesting to me, but at the end of the day, Apple's probably still a moneymaker over the next couple of years. And if you want to ask me which stock of those is the biggest buy of that bunch I'm showing you right there, the best risk-reward opportunity of all those stocks, in my personal opinion, if we're looking out the next few years here, is Amazon. Amazon is the best risk-reward profile of those stocks I'm showing you right there. I would say after that, I would go Shopify, and then after that, I would go MU. Now, Trade Desk. This is a stock. I'm still doing research on Trade Desk, by the way, trying to see if this is a stock I ever want to buy. Stock fell all the way to $49. This stock has just been getting hammered left and right, down another 12.8% here today. Stock is down a shocking 58% this year. We're in April, and it's already down 58%. Trade Desk, I mean, if you ever want to see a broken stock, that is a broken stock. Now, you also got some funny moves out there here today, right? Look at the Cheesecake Factory. I mean, the far majority of their restaurants are all operating in the United States of America on U.S. labor and U.S. produce and, food. And yet that stock got hammered 9+% here today. Like, that doesn't make sense. That's silly. But, listen, for a company like Cheesecake Factory, people say recession, maybe business pulls back at the Cheesecake Factory in North Italia or Flower Child, there are other concepts. That's always a fair argument, but the thing I'll say for Cheesecake Factory is interest rates matter a lot more for them because they have 2 banger concepts that they're going to be expanding all over the United States of America over the next 5-10 years. One's called North Italia, one's called Flower Child. So if we're talking about yields on debts going lower, they're going to essentially be in a position where they're going to be able to expand faster over the next 5-10 years and take out debt at very cheap rates. Additionally, if labor weakens at all over the next year or two, which we'll see if that even happens, but let's say it does happen, that's a lot more cheap labor for Cheesecake to add a lot more restaurants, to have a lot more labor at cheaper prices. So at the end of the day, that they're set no matter what, right? So this is just a silly move and a great buying opportunity for anybody in regards to that's interested in Cheesecake Factory stock here today, right? This shows you there's nowhere to hide on a day like today because this is very important stock I'm showing you in front of you right there. Very important. Whirlpool. Whirlpool fell to $86 now. The stock is down another 25% so far this year, down 5+% here today. And the reason that's so important is it shows you there's nowhere to hide in this market right now, right? Whirlpool's an American company that makes much of their let's call it appliances in the United States of America. And yet there's still that stock just gets hammered to new lows and new lows and new lows and new lows. And it just shows you there's nowhere to hide. I could understand if this was an appliance maker that was based in China or Korea or Mexico or wherever. But this is an American company that manufactures many of their appliances in the United States of America and sells to American consumers. Now, they do business over the globe, but they've gotten out of some of the international business in future years, so you just know where to hide. Even a stock like this is a perfect example of there's nowhere to hide. Adobe down almost 5% here today. They don't even make physical products. It's not like they got to make something in China and then they got to pay the tariff coming in. And it's like, oh my gosh, we got a 67% tariff we got to pay. Oh, we make this in Vietnam. We got a 85 billion % tariff we got to pay. No, this is Adobe. It's a software company, recurring revenue business model. And yet that stock can't get a break. Adobe's a buy here today. I was not a stock I bought. I'll share the buys I was making here today. But I was very tempted to start a position in Adobe here today because that's a steal deal. There's starting to become a lot of steal deals in this market that, anybody that's got a little bit of a longer time horizon is going to be like, thank you for buying that stock. Thank you. It's bad when you see something like this. Look at that. Gold was even red today. Silver went down almost 8% today. Silver? You gotta understand, gold and silver are seen as like safe havens, right? Gold's obviously the ultimate safe haven, and then after that, silver. And so to see gold and silver red on a day like this shows you that really it was one of those type of days when people said, I just want out of everything. Which then you go to the dollar. But then there's also fears about inflation, so does it make sense to go to the dollar? And there's also fears about going away from the dollar as a reserve currency. So does that make sense? Right? Like you kind of start running through this and you're like, hey, I don't know if that makes the most sense, to be quite honest, right? But yeah, that's when you know it's bad, when even gold is down, silver's down. Now, 10-year treasury. This is extremely important for everybody watching this video right now. Listen, it looks like the 10-year treasury is going to head into the threes. I could tell you if we see any more weakness in this market, if we see more ramped up recession fears, we're headed to the threes in regards to that 10-year treasury. Now, I've been doing some tests on Google recently because you got to understand the 10-year treasury matters significantly for two things specifically. Okay, so I've been testing out Google's AI product recently, and I'm like, I'm going to ask Google AI, whatever, why does a 10-year treasury matter? Because I want to see if it brought up the two things. And here's the results. Look at this. It actually called it. It called it. So Google's AI is doing good. I've been testing it lately, the last couple of weeks. Hey, I know Google stock gets a lot of hate, but I'm telling you, Google stock actually right now is a buy. It's not a stock I personally own. Google stock right now is a buy. I've been testing their AI products, and I'm actually very impressed because they mentioned the two things that are, why the 10-year matters so much. It's arguably the treasury that's talked about the most in the stock market because it affects things like mortgages in a substantial way. And whatever mortgage rate, the 10-year matters more to mortgage rates actually than the Fed funds rate, believe it or not. Additionally, corporate debt. And what do a lot of corporations have? Debt. Like almost every corporation out there has some level of debt. Some have hundreds of millions of dollars debt, some have billions, some have tens of billions of dollars of corporate debt, right? And so a lot of times they go ahead, roll that debt over, refinance it, things like that, right? And so at the end of the day, the 10-year, we got to get this 10-year down, given that we got a lot of corporate debt that needs to be refinanced. We got also a lot of government debt. Whew, that's a whole situation. So this 10-year, Trump in the administration, I think, really wants to keep getting this 10-year down. I'll be honest with you guys. I think they want to get it down a lot more. I think they wouldn't mind getting that 10-year, under 3.5%. I think they wouldn't mind getting into the twos. Now, can they get it into the twos? I think the only way they could get in the twos is if we actually have a for sure legit recession. If we have a for sure legit recession, then you could talk twos or maybe even in the ones. But outside of that, you can't really get it down there. But even on a bunch of fear, you could easily get this into the threes and like to a 3.5% type number, okay? Alrighty, next up here, we're going to talk about why the VIX matters, what it means to the stock market if you're trying to figure out, is this a good buying opportunity, not? And then we'll get into my biggest buys ever and then my cash levels, okay? So the VIX hit the magical number 30 here today. It did indeed hit it. I mean, massive spike up in the VIX. VIX measures volatility in the market. And basically, any time period the market's crashing, VIX is going to go crazy. Like, I've never seen the market getting hammered and the VIX not spike. It's just what happens, okay? So here's what you got to understand about the VIX in that 30 level, okay? Every time the VIX goes to 30 or above, you need to be buying stocks. I repeat, anytime the VIX goes to 30 or above, you need to be buying stocks. The further it goes over 30, the heavier you need to buy stocks. The more like quote unquote all in you need to get in the market essentially. Because that means you're going through a time period of massive turmoil in the stock market. We know the massive turmoil never lasts. It's here today, gone tomorrow, right? And you're going to get stocks at prices that you likely won't see for years to go in the future. And so to take you back to some time periods just in the past 20 years of looking at the VIX, tell me one of these time periods where the VIX went 30 plus and it was not a good buying opportunity. 2022, great buying opportunity. You bought stocks in 2022, especially big tech, anything tech related, you made a fortune. 2020, absolutely. You bought pretty much just about any stock in 2020, made a lot of money. 2011, absolutely. So much money to be made. 2010, even more money to be made. 2008, 2009, even more money to be made. When the VIX goes over 30, understand you got to be buying stocks. The further it goes over 30, understand you got to be unloading large amounts of cash and buying everything you can get your hands on in that particular market. Now, with that being said, just because the VIX goes over 30 does not mean the bottom's right there. And I take you back to 2022. I think this is a good example. The VIX went, nicely over 30 in the springtime of 2022. Did the stock market bottom in the spring of 2022? No. We had a lot of damage at that particular time, but it didn't bottom. The bottom came for the stock market in the fall of 2022, when actually the VIX was quite a bit lower. Because this was another huge spike in the VIX that went to 30 plus, but that was around like August of 2022, if I recall. And once again, we didn't bottom the market. Stocks, for the most part, didn't really bottom, and the indexes didn't bottom until like October, November of 2022. So is it possible, VIX is 30 today, you're buying, getting great pricing on stocks, and the stock market goes lower for the next 3 to 6 months? Totally possible. That's not always the way it works out, so don't also bank on that. Don't look at 2022 and say, well, the stock market didn't bottom for another 6 months, so that means we got another 6 months of drama here and, volatility in the market and falling. Doesn't work that way. I could take you back to 2020. The VIX spiked up to 30 and then above 30, and then you better have been buying right away because market flipped like that, and next thing you know, the very next month, we're already back up again. So do understand 30 and above is a buy. It's always a buy. Doesn't mean it doesn't mark the bottom on that specific day, but it's a telltale sign of better be buying. You better be buying, right? Now, if I show you back to the spring of 2022, right, the NASDAQ was around 12K at that particular time, right? Keep in mind, the NASDAQ did not bottom until it was in the 10K range, right? So you say, I could have waited. Yeah, you could have waited, but the market could have easily bounced back much sooner than that, and you would have missed your opportunity, right? At the end of the day, would you be happy to have bought the NASDAQ at 12K? Absolutely. The NASDAQ, even after all this crashing it's been doing, the NASDAQ is still 16,500. So if you could go back in time and buy the NASDAQ for 12,000, you of course would. Everybody would. And I could take you back to every single time period when the VIX spikes 30 plus, it's always a buy. Once again, it doesn't mark the exact bottom, but it's a telltale sign of hey, you're closer, you're getting pretty close to this bottom, right? It's probably happening in the next few weeks, the next few months. And at the end of the day, in a few years, you end up looking back and you're like, geez, why wasn't I buying? If you weren't buying, if you were buying, you're like, how big is the house I should buy, right? That's what you're thinking in the end. No, the NASDAQ here recently is down 18% from highs, which puts it into major correction territory. We have a major correction now on the NASDAQ. This is getting close to the damage we witnessed in the NASDAQ basically at 2018, late 2018, we had around a 20% drop in the NASDAQ. I believe it was 19.9% or something like that. And so we're getting pretty close to that 2018 drop. And remember, I keep drawing you guys back to that 2018 time because this year reminds me a lot of 2018. A lot. The tariff drama, Trump's in the news every second of the day. Trump's doing news conferences every second of the day. I'm telling you, this year is reminding me so much of 2018. And then we got a NASDAQ getting close to those 2018 kind of drop range now at this point in time, right? Very interesting. Very, very interesting. Now, NASDAQ peaked to trough in the 2021 to 2022 drop. NASDAQ fell a little over double this. It fell around 37, 38%. Now, that being said, I do not expect that sort of drop for this NASDAQ this time around. The big tech companies are in way too strong of a position. Even if you're talking about a weaker economy, they're in too strong of a position. So, I mean, all things are possible, right? I just don't think it's a super high probability. That was kind of a one-off freakish situation in regards to NASDAQ. Now, the Russell 2000 is officially in bear market. Yep. It's in bear market and it's approaching a crash market. I categorize a crash in the market as a 25% plus move negative from a recent high in an index. So we're getting close to crash market. for the Russell 2000. But we're past correction now. We're past major correction. We're now officially in bear market. Bear market's a 20% plus move down in an index, and the Russell's sitting at over 22% now at this point in time. So literally, if you just got another couple days of weakness or even a day of weakness in the Russell, we could be talking about this will be in crash territory, right? Which is, once again, more signs that you need to be buying. Like how often does the NASDAQ go through a major correction, right? Where you see it go down, we can call it getting close to 20%. You only see that every few years. It's very common to see a 5 to 10% downward move for the NASDAQ. When you start talking about close to 20% for the NASDAQ, it happened in 2022. It happened in 2020. It happened in 2018. Before that, it might have to go back to 2015. I'm not even 100% sure it happened in 2015. The moral of the story is, to get the NASDAQ to fall like this, it only happens usually once every, I would say 2 to 3 years. So if you're in one of those time periods, buy. And I'm not talking buy. All right, next one up here. Third thing to get into, my biggest buy day ever, what I bought, and then we'll talk about my cash levels, okay? So, yeah, it's a big day. So, I moved $100,000 over. I bought $58,000 on Nike. You may say, come on, man, there's nothing good with Nike. Nothing good. It's all bad. Vietnam, tariffs, the company's in a turnaround mode, blah, blah, blah. I think I'm going to triple my money. I think that $58,000 is going to triple up within 3 years. And I'm very confident in that. I like everything I see there. A bunch of short-term stuff. Nike's been through this game a million times. They got Elliott Hill running the show now. He took back over the company late last year. That guy's been through everything with Nike. He's seen tariffs. He's had to move production lines out of different countries over time. He's been through it all. I'm very comfortable putting $58,000 in Nike today. ELF, $13,000 buy. This is one of the silliest drops in the market here today. ELF, the fact that they dropped ELF down to that price is just baffling. Baffling. ELF has already been through the tariff drama. They already went through it back in 2018. And guess what? They got through it just fine. And the company's stronger and better than ever. So what do you think they're going to do? They're going to do better than ever. You want to say, okay, weaker consumer? You know what that means? Trade down to ELF, because ELF has the quality products at cheap prices. So if you want to talk about a weakened consumer and, a woman can't afford as expensive makeup, they're going to ELF. ELF's now doing business all over the globe, so some of these tariffs aren't even going to affect a lot of their global business, whereas back in 2018 when they had to go through it, the first time, they were heavy U.S. And that management team's gone through this game before. They already seen it. And if you listen to the latest conference call, they already showed you the roadmap on how they're going to mitigate the tariffs. And keep in mind, a lot of the products that ELF brings through are like products that are $2, $3, $4, $5. For them to raise price on that is nothing. Literally nothing. So ELF, easy money buy here today. AMD, bought pretty good amount of AMD, about $11,000 worth of AMD here today, right? I've spoken about AMD a lot on the channel recently. I think we'll just look back at this time period and be like AMD is one of those stocks that is the most well-positioned for the next bull run. Whether the next bull run starts this year or next year, right? Let's say this year is just a whole down year and we just go down, down, down. Let's say the next bull run doesn't start till next year. Whatever the situation is, when we do go through the next bull run, I think AMD is one of the most well-positioned companies to absolutely have an exploding stock price. I'm talking like what we witnessed in nvidia, what we witnessed in Meta, right? If you were buying that stock in 2022, that's how I feel about AMD buying it this year. I think people that are buying AMD this year will look and say oh my gosh, this was buying Meta or nvidia back in that 2022 stock market crash, right? Honest, I bought 1,111 shares of Honest in this particular portfolio. Oh my gosh, that's just another silly sell-off, another silly sell. You want to talk about somebody that's ready to get through the storm, Honest is very well positioned. Very well positioned. They're in a stronger position than I've ever seen the company in. Have you seen the balance sheet? The latest quarterly numbers was around 75 million. Incredible number in terms of cash on the balance sheet with no debt. Come on. Amazon, I had to buy some Amazon today. Like, you're going to give me Amazon right now in the 180s? Come on, man. Come on. Anything, Amazon, keep this in mind in regards to Amazon stock. I'll give you a specific price, okay? Anything under $200 a share for Amazon is stealing money if you have a long-term outlook. Stealing money. Anything under 200. When you think about the e-commerce business, how much growth that has over the coming years, when you think about the AWS business and then their advertising business, come on, man. Those are 3 growth businesses for decades to go in the future. Everybody's worried about what's happening today. I'm worried about what's happening 5 years from now. Today's today. It is what it is. And now we hear about Amazon's bidding on TikTok. We'll see what happens with that. I don't want to get too excited about that. But I will say, that happens, that's huge for Amazon. Like, oh my gosh, do you know what that would do for their advertising business in their shopping platform? Considering, obviously TikTok's pretty big in shopping now. Oh my gosh. That wasn't all my buys. I did more buys. These particular buys were in the public count here today. Moved $43,000 over. It's been a long time since I moved a big dollar amount into the public count. Like, usually I just do my every Friday buys in there. Not today. Not on a day like today. We're doing big boy buys, okay? What did I do? I bought $12,000 plus of EL, Estee Lauder. Another just beaten down dog stock, It can't get any more negative in regards to these sorts of companies. It cannot. I mean, it's ridiculous, right? I bought another $8,500 worth of Nike, another $5,600 worth of Nike, and then another $17,700 of AMD in the public account here today, right? I said, just did some pretty big buys. Biggest day of me putting money in the market in years, maybe my biggest ever. I put $143 of fresh money in today. That's bigger than even my 2022. Yeah, I mean, I do remember there was a day in 2022 when I bought like $70,000 worth of Meta, or $77,000. I think that, the videos still exist here on YouTube if anybody wants to actually find it. But if I recall, there was a day, I think I put $77,000 in Meta in a day or something crazy like that, right? And so this is like a double up of that. This is like a whole other level of big buying here today, right? Alrighty. Listen, before we get into where my cash levels are at and what my plans from here, I need to say something very important, right? Because you see me buying big dog buys here today, right? When you go through a correction or a crash in the market, and since I've been on YouTube since 2016, I've now seen a lot of corrections or crashes in the market, right? I saw the crash in 2022 when the NASDAQ fell around 37%. Saw the crash in 2020, which was the fastest stock market crash in history. S&P 500 fell almost 35% like in a matter of a few weeks. It was ridiculous, right? Obviously seen the 2018 drop. I've seen enough corrections and crashes since I've been on YouTube and kind of, seen retail investors come and go in the market and traders and things like that. These markets is when you really find out who's long-term investors and who's not. Really is. Everybody can say, oh, I'm a long-term investor. Oh, I'm an investor. When the market goes up every day, it's not hard to do. If the market goes up every day and all your portfolio does is go up, I don't know one person that wouldn't feel comfortable with that. You could be the most risk-averse person in the world, but if every day you wake up and your portfolio says a bigger number and bigger number and bigger number, you're like, oh, I just made $5,000. Oh, I just made $10,000. I just made $25,000. Who could do that? Everybody could do that. These markets, this is when you find out who's really long-term investors. Because you know what happens? Some investors sell. They sell. Some investors never come back to the market. Some investors say, I'm going to sell now. I'm going to get back in, blah, blah, blah time. And then they think they're going to get better returns. I have yet to see one person in my 16 years plus in the stock market, in my nearly 10 years on YouTube now. Oh my gosh, just dated myself, almost 10 years on YouTube. I have yet to see one person who times in and out of the market all the time, who has great returns over a 5+ year span. Haven't seen it once. All these people that say, oh, it's going down a lot more, I'm going to time back in near the bottom, boom, boom, boom. It's all baloney. If I look at those people's returns, they're bad. They're not even probably keeping up with the S&P 500. because they're trying to play these games of like short-term, blah, blah, blah. Short-term doesn't get you anywhere. You should know that. I don't know one person on that Forbes list that got there by focusing on the short term. Every single person on that Forbes list was thinking long term. Every single one. From Bezos to Buffett to Musk, these guys are all thinking years in the future. Every business legend you could have ever looked up to, Steve Jobs, they're thinking years to go in the future. They're not worried about today. Today is what today is. If you want the big money, you got to be focusing on what's happening 2 years from now, 5 years from now, 7 years from now. The day-to-day drama is just what it is. It's just a drama. It's here today, gone tomorrow. And who knows, a month from now, half these tariffs could be removed or depleted or whatever. Like, it's going to be what it's going to be. But you got to be thinking years ahead. And so in these sorts of markets, this is what you find out who's the boys and who's the men in this market. Because the men are stepping up and they're going to buy. If the market goes another 20% lower, they're going to be buying the whole way, right? As long as you got more income than expenses, you're in a good financial position. If you don't have more income than expenses, better get on that dang Uber Eats, that DoorDash, Grubhub, do what you got to do, okay? Because you got to have more income than expenses. That's the number one key to investing. We find out who's the boys and the men in this market, right? And it's going to be the ones that step up and they buy the whole dip, and then they look like geniuses a few years from now. Like, it's what it always happens. It never changes. They always say this time's different. It never changes. If you were buying as a tech bubble blew up, genius. If you were buying as a great financial crisis blew up, genius. If you were buying in the 2018 correction, the back half of the year like I was, genius. If you were buying during the 2020 crash, genius. If you were buying during the 2022 crash, guess what? Genius. You want to go back before that? We want to go back to the 90s. We can go back to the 80s. We can go back to the 70s. It doesn't matter. Genius. But the other people think they sound smart in the short term because they say, oh, you shouldn't be buying right now. Wait till blah, blah, blah day. Oh, yeah, that's going to be the perfect time to get in. That's when the stocks are going to hit the lows and then they're going to go up from there. Whatever. Good luck. Good luck to you. Because I don't know anybody that's done it successfully over time. And I know a lot of people. The only people I know that got the big houses and the nice cars and go on the nice trips and all that stuff, all long-term thinkers. All focused on their investments over the long term, not what the day-to-day blah, blah, blah is, right? And they take, when assets are trading at silly prices, they take advantage. I see a lot of assets today that are trading at silly prices. And I believe those assets will appreciate greatly over the next few years. And if I'm wrong on that, I'll gladly take the risk. Because the risk to not taking that risk is much bigger. The risk to me not buying Nike today, ELF, AMD, all the stocks you saw me buying today, the risk for me not buying those stocks is much larger than the risk of buying those stocks here today. Once you begin to think like that, you start to think differently. That's very important, okay? Some people are going to get what I just said there, and you're going to be like, that's genius. Like, why? Yes, the risk is bigger to not being buying on a day like today than it is. Some won't get it, and that's fine. Not everybody's built for this. Not everybody's built for this, okay? That's the other thing I found over time. Not everybody, sadly enough, is built for this game of being a long-term investor in companies. But this is the sort of market you find out who's the boys and who's the men. And that's what we're finding out, right? Who's the little girls and who's the grown women? Who's the independents out there, okay? That's what you find out in a market like this. All right, let's talk about my cash levels now at this point in time, right? So obviously, when it comes to me with cash, I was building cash a lot in the second half of 2024 going into the beginning of this year, right? And the reason being is, we just had a tremendous bull run. We had a tremendous bull run from basically, the end of 2022, I was extremely low on cash, extremely low. Right. And then I kept buying as we went into that first half of 2023. And then I started to slowly try to build cash. Right. as we went throughout that, and then as we went throughout 2024, and built cash more and more and more. And as the market went higher, built cash more and more and more. And it wasn't because I was looking at Warren Buffett. I'm like, Warren Buffett's building cash, I got to build cash. No, it's just for the simple fact of like, I was very low in cash. I needed to get to healthy positions. Then I got to healthy positions. And then the market was trading at really high valuations. At the end of last year into the beginning of this year, very high valuations, right? And so I decided, I'm going to build cash a little more. And so I've gone into this situation in a really strong cash position, right? And I do my weekly buys. I buy in my private portfolios every Friday, as well as the public account and the Patreon portfolio. But I haven't been putting like that big dog money in until really like recently. This is when like the big dog money has started to come in, right? And I've started to deplete some of those cash levels. So the moral of the story is my cash position is definitely weakened now, right? I've been buying, this last couple of weeks, and obviously a $143,000 buy today. So definitely weakened my cash position, but I'm still strong like Donkey Kong. We could double up this loss in the market and I'll still be buying. So I'm still in a good cash position. I'm just not in as good of a cash position, I guess you can say, right? And so I like, when you could still make some good money on your cash out there right now. If you got your money in a good savings account or CD account, you're still able to make good money. We're probably at the tail end of that, I'll be honest. I think we're at probably the tail end of the easy money phase. In easy money, I mean just being able to make 4 or 5% on your money. It feels like this is about it. And so it feels like, that's about done. And don't be surprised if a lot of these savings accounts and CD accounts start yielding like 2%. And if that 10-year keeps going down, then we get the Fed starting to lower rates substantially, this summer and into the fall time. Don't be surprised if you start seeing 1 and 2% on high yield savings accounts and high yield CD accounts. So, it was fun while it lasted, man. It was a lot of easy money. Like, I would make like $1,000 a month plus, I'd make like 4 figures a month plus just having money in savings accounts and CD accounts, like, phenomenal. Like, geez, talk about easy money and for it to be guaranteed. I think those days are over. And so now, we get more into investing, right? And we get more into buying stocks. And that's also kind of how the equilibrium works. I mean, at the end of the day, if you told me I could go make 18% of my money in a savings account and it's guaranteed by the government, why am I going to buy stocks? I wouldn't have been buying stocks today. If the U.S. government said, I'm going to give you 18%, I wouldn't have bought AMD today. I wouldn't have bought Nike. I would have said, geez, I get guaranteed 18%. I'm good with that. No, the government says, I'll give you, 1.7%. Nah, I'm good. I'll buy stocks, right? All right, guys, appreciate you joining me as always, here for you in the bear markets, the bull markets, and the kangaroo markets. Appreciate y'all for joining me as always. If you're looking to follow me on X or Instagram, there'll be a pinned comment down there today. Much love and have a great day.